Hi, Naomi.
Right?
Hello, welcome everyone. I am thrilled to have you all here for your free Solano Home Assist Workshop, Your Path to Home Ownership, a Guide to Buying Smart. Before we begin, I would be remiss if I didn't extend our sincerest gratitude to Solano County for making this event possible. Solano County is deeply invested in ensuring that that all of our community has access to help and resources to get home and stay home. If you're not familiar with us, Solano Home Assist, we are dedicated to helping the community. So as I said, our motto is get home and stay home. This reflects our commitment to not just finding you a place to live, but ensuring that you can stay there and thrive for years to come. We provide free one-on-one counseling, financial education, and workshops on purchasing your home, eviction prevention, foreclosure assistance, credit repair, and much more. And you can sign up for any of these services for free at solanohomeassist.com. Now, I am excited to introduce our expert instructor today, Cortez Dameron. Cortez is more than just a real estate professional. He is a passionate advocate for home ownership, financial empowerment, and community growth. He has a deep love for real estate and a strong belief in building generational wealth. Cortez is dedicated to helping individuals and families navigate the home buying journey with confidence. Whether you're a first-time home buyer or just looking to refresh your knowledge, this workshop is designed to give you the tools and confidence to approach home ownership proactively. And before I bring up Cortez, let me just remind you that this workshop is for general information purposes. You being here does not constitute an agreement for representation or require you to use any specific real estate professional or company. You're free to choose any real estate professional, lender, or service provider for your home purchase. We are just here to help and give you the knowledge you need to make the best decisions. So, with all of that out of the way, it is my honor to introduce Cortez. Hi, Cortez. Oh, I've got you muted. Sorry, here we go. I fixed you. Go right ahead. Hello.
Hey, how are you this evening? Thanks for that lovely introduction. I had to make sure I live up to that, which I think should be pretty easy because you described me pretty well there. So I'm blushing over here. I can't believe that I'm that great. No.
You are.
How's everybody?
Even before I met you, I've heard so much about you and how you're so plugged into the community and wanting to help educate folks. And I think that is just amazing. How did you get into real estate?
Okay, so I got into real estate. I always was interested in real estate from a young age, but how I took the journey was I met this guy who used to buy houses and flip them a long time ago. That was my first thing. And then I did construction work, and my whole plan was to be a carpenter and then get into real estate and, buy and flip and everything. And what happened was I started working and I just was doing that. So I never jumped to the real estate part. Unfortunately, my mother passed in 2020. And when she passed, I remember her saying, Cortez, you're doing such a good job. You're taking care of the kids. You did all that, but do the real estate like you want. So her death was like one of those wake up calls for me to be like, all right, let me pursue something that could be a little bit more meaningful for me and something I really want to do. So we're in 2025. So we're coming up on her fifth year that she's been gone in a couple, actually next month. And I got my license in 2021. So she passed in April 2020. Within a year, I was licensed, and I've been rocking and rolling ever since.
That is absolutely amazing. Thank you. Well, I am so grateful to have you here. Right before I turn it over to you, I want to let everybody know who's watching us that we will be answering your questions live throughout the session. Please feel free to type them into the chat, and we will do our best to address them. Also, if you're having trouble reading some of the items on the screen, the guide that Cortez is going to be going through today, it is available on our website. So if you go to solanohomeassist.com/workshop/guide to home ownership, you can continue to watch this video there. And it has links and a viewer for this guide. So you don't just have to see the screen. You're welcome to download your own copy, and I will put that URL in the chat. So that being said, Cortez, I'm going to turn it over to you. Do you want to start? You want to start with your document? Is that where we're going?
Yeah, we could put the first sheet up right there. Okay. Yeah, that's perfect.
You got it. All righty, and I'm going to get my.
All right. So what this is a buyer's consultation. This is your path to home ownership. Some of these steps that's in these flyers are some of the things that you will have to get through when you're buying your home, when you're actually in contract, and some of the things that you have to do before you're in contract. But it's just a lot of talk. So I want to make sure that people are engaged. So this is Solano County. If you're from Solano County or wherever you're from, please type in the chat what city you're from, so we can see that you're engaged before we go through this. And I want to talk about some of the rumors. What are some of the rumors that you know about home buyer, home ownership, and what do you think as far as down payments and things like that? All right, we could go ahead to the next slide. Okay, next slide, please. Is that how we do it? Oh yeah, there we go. All right. I think I'm gonna do it like. So this is a roadmap. So when you're thinking about buying a home, it's things that you need to do. You need to make a plan. Okay. So this is your roadmap, and this is a bird's eye view of the home buying process. So this isn't a consultation. This is just education. But what you would do is when you are thinking about buying a home, the first thing you would like to do is talk to a professional, a trusted person that you feel comfortable with, so that you can talk about your objectives, your priorities, your time frames, and understand some of the new laws that have came into place. Can we slide this up some? And some of the new laws that took in place. A lot of right there is fine. A lot of buyers don't even know about the new laws that's taking place, but we'll talk about that soon. But that is some of the things that you talk about during an initial consultation. Financing is the big thing. How are you going to buy the house? Are you going to pay cash? Are you going to get a loan? How much do you want to pay a month? That's like my number one question. When I talk to potential clients, I always want to know, what is your monthly goal? What do you want to pay monthly? Because ultimately, that's what's going to help you out. You don't want to be looking for a home that's going to be 2 or 3 times what your monthly expense is. So we always go by what's comfortable for you, where you can buy the house and not only buy it, but keep it. So financing is a big thing. Now, once you go through financing, it's a lot of options for financing. It's a lots of down payment assistance programs. It's lots of things out there. It's actually over 2,000 programs that can help you with down payment home assistance from NACA, which is a neighborhood advocate. And what they're doing is they're giving you no down payment, no closing costs. It's not a catch. It's just things that you have to do to make that work. And it is something that happens. And I've seen people be very successful at it if they take the steps. When you're getting pre-approved, this is like the very first step. And it's the step that will help you navigate moving forward. When I first bought a home, I wasn't ready. I just went and I talked to a lender. If you get a good lender, like one that genuinely cares and just not looking for the low-hanging fruit, they're going to walk you through everything. They're going to tell you what your credit is. They're going to tell you what you need to do. right? Like they told me, they was like, Cortez, you don't have any credit. You need to establish some credit. So they told me to get like a prepaid credit card, or they'll tell you need to pay down. Sometimes you have a lot of debt and you might need to pay some of that debt down, because that's how it works. When they do financing, when they do financing, let's say you're looking for an apartment. When you look for an apartment, they want 2.5 to 3 times what you make, right? But when you're home shopping, it's not quite how it works. What it is they want to look at your total gross income. And then depending on what type of loan you're getting, they have FHA, conventional, or VA loans, right? Those are the traditional loans. Whichever loan you have, it has a debt to income ratio. And so just for the sake of this, so you could kind of gauge where you're at, whatever income you have right now, let's just take 53% of it and say, whatever that is gross, that's what you will be pre-approved for, minus any debt you have. So let's say you have a car note that has more than a year left to pay. They're gonna subtract that. So let's say mortgage, they said 3,500. Okay, your car note's 550. They're gonna subtract the 550 from that. You have anything that's debt, they're gonna subtract that from your total amount, and that's where you'll get your pre-approval. Once you see what your pre-approval is, that's how you go home shopping, which is next. What we'll do, home shopping. When you're home shopping, what do people do? What do people do now? Well, they say 94% of people that thinking about buying a home, the first place they go is Zillow. So those are things like that. And a realtor that you meet will have their own tools or whatever they have in place, but they'll be something. So once you get that pre-approval amount, your realtor will set you up, and they'll have homes coming to your email. You might even be on Zillow or Realtor.com or Redfin, and then you'll know your price point, and you'll have searches too. And that's where you and the realtor coordinate. Like, okay, I like this house, I like this house, and you guys set up a tour. So you go on tour. Okay. Now, when you go on a tour and you find a house, let me slide down a little bit. You're going to be making an offer. And this is, I'm just going to go through this first row because a lot of these things are going to pop up again. But you make an offer. You see something you like, you love it, you make an offer on it. Me, or not me, but anyone you're working with, the lender will have you strategize. So we'll know what type of offer that we need to put up. We know what type of terms that we need. We need to know if we're going to ask for closing costs, or if we have closing costs, or if we need credits to buy down your rate so that we can get the most affordable mortgage rate for you. Okay. Or we can go to the next page. The loan process. I did touch on this, and this is more for you so you can understand. Pre-approval, the thing I mentioned before, that's just the beginning. And I tell people this all the time. When you're pre-approved, you are not home free. You have to stick to what your pre-approval is, and don't make any major purchases. I've personally never had a client that made a major purchase after pre-approval because I pound this down their neck like this is serious, because it could mess up everything. Once you get pre-approved and you're home shopping, don't make any major purchases on credit. Don't pull any money out your bank account other than normal spending. If you have a large sum, don't pull it out and put it in a different bank. Don't do anything. Leave it the way your lender pre-approved you, because they're going to be going through all these things. And what's next? So underwriting. And also I'm going to touch on this. Pre-qualification or pre-approval. Get a pre-approval. If you go into your bank or something, they like to give you these pre-qualifications, and they're cool. But in the Bay Area where we live, Solano County, Sacramento, wherever you may move to, a pre-approval looks way better on the offer than a pre-qualification. A pre-qualification is basically saying, hey, I talked to this person. They told me what their credit score was. They showed me what their bank statements was. And from that, we pre-qualified them. We have not went through any of the motions to see if they're really qualified. So when you're home shopping, you don't want a pre-qualification. when you write an offer and you put, oh, it's a pre-qualification, the realtor's going to look at that, and the seller, they're going to be like, they're not going to take you serious. But pre-approval is serious. Now, the difference is, like I said, pre-approval, they have ran your credit. They have went through all your finances, and certain lenders out there fully underwrite you. So what we're going to go to next is underwriting. Underwriting. When you get your offer accepted, it's just the beginning. We're just getting started, ladies and gentlemen. But underwriting is something, it's like what your lender did in the beginning to pre-approve you. They have to do it again. They need to make sure that you did not go buy a car. You did not celebrate and go get any furniture on credit or mattresses or things that people like to do when you're moving into a new place. But when you are buying a house, these are things, unless your income is so higher than your debt to income ratio, which is very possible. But if it's not and you're tight, you don't want to add any more debt. So you don't do it, because those underwriting, they're going through everything. I mean, it can be stressful. They're going to ask you stuff like, when you get in, and we'll talk about this later, but you have to make an earnest money deposit. When you make this earnest money deposit, within 2 or 3 days of you getting in contract, the underwriters are going to actually ask you what this is. Even though they know that you're buying a home and you had to make this down payment, they still question it. It's like a fine tooth comb. They will pick through everything, because ultimately they want you to be able to buy the house and keep it. I don't know if you're familiar with, and I can't see you guys or see the chat, so if you put it in chat, I'll see it later. But in 2008, we had a huge market crash, and one of the reasons was because they were approving everybody. If you wanted a house in that time, you can buy one. Literally, everyone was being approved. They had a thing called ninja loans. It was no income, no job, or assets. You didn't have to prove anything. You could just say it, and they could send it through, and you were getting approved. Well, what happened was people were buying these homes, and they were using these loans like an ATM machine, because not only could you buy the house, you could pull money from the house, and people were doing things with them like lavish vacations, jet skis. Some actually fixed up their house. But what happened was the job market slowed down, and people were upside down in their homes because they had pulled so much money, so they couldn't sell them because they were upside down, and it just caused a market crash with the homes. People were talking about it for years. The bubble came and it busted, and that's why. So now they do not just approve anybody. You have to be well qualified, because they do not want that to happen. So if anybody's wondering if the bubble is going to burst, it's nothing showing that. Before, when it was, I wasn't even a realtor then, but I was very involved in real estate, and I knew that bubble was bursting back then. I see nothing like that right now. We have high demand with buyers and low inventory. So you know how that goes. Okay. The title company. The title company is, the loan approval. The underwriters are going to get you. Go ahead.
Cortez, so I'm gonna pop in. So there's a couple questions in the chat. So one question, Rick had asked what the difference was between pre-qualification and the other thing that you had said, the pre-approval. But you answered that. And then Vivian asked about, because you were talking about that they're going to run everything a second time, and she asked about if it's going to hit her credit each time, and what the impacts are of that.
Okay, so it's not going to hit your credit again. They're just checking all your files. And even if it was, let's say when you're buying a house and things like that, you're going to take a hit from getting your credit ran. But it's like, okay, she was buying a house, so it's one of those things, and it will hit you, but it will bounce back up. Just like if you bought a car or any other inquiry, it will even itself out. So whenever you add a new account, and I'm not a credit specialist, but I do know this because I have to fix my own credit up. Whenever you add a new account, it makes your credit history and credit age younger. So you are going to take a hit when you buy a house, but over time you will boost it back up just like anything else. I hope that answers that. Okay. If it didn't, let me know. Loan approval. So the underwriter, they went through all that. They see that you didn't go buy a car. you know what? I learned about this before I was a realtor. When I did construction, it was a guy on my crew who had bought a house and he went and bought a Mercedes and in escrow, and he did not end up getting that house. So I was very aware of that way before I was in real estate. So loan approval. This is, and we're going to go through this. It's steps to this escrow. You know, it's inspections, it's appraisal, and then the last thing is the loan. This is when the lender goes through everything from the underwriting, from the inspections, the appraisal, make sure everything's right. Really, they're not looking at inspections, they're looking at the appraisal because they're not going to give you money for a home that is not worth what we're paying for. So once all those things are dotted, you guys go to the title company, you sign your mortgage agreement, they send it to the loan company does it, you're funded, you pretty much have the key. We're going to go through this is kind of repetitive, but it's a learning thing, so we can move on to the next slide.
You've got a question. Rick was asking, what does escrow mean?
Escrow is an excellent question. So when you, and I believe that's going to pop up, but that's a good question. Escrow is when you're in contract. So when you're out and offer time, when you're out looking at homes and you put in an offer, when that offer is accepted, that means you're in escrow. The title company, if you ever see them like Chicago Title, Old Fidelity, Placer Title, if you ever see those buildings, those are escrow companies. They're a title company. And what they do is they are like the person, they're like the mediator for you and the seller. So if you're the buyer and the seller, it can get nasty in escrow because we're talking about inspections. We're talking about appraisal. Inspection comes back, we see a bunch of things, we're negotiating. Now you gave them money, but you didn't give it to the seller. You give it to the title company, which is the escrow officer. So just in case the deal falls apart, because deals do, that's part of shopping for a home. You might not get the house you want the first time, but whatever house is meant to be will be the one. But you have the escrow company who will give you back your money. So it's no hard feelings. You know, when money and stuff is involved, imagine giving the money to the seller and then the deal falls. Now they have to give it back to you. We can see how messy that can be. So escrow is the name of being in contract. And they have a person who's kind of like the mediator throughout all the negotiations. I hope that answers that question. And yes, stop me anytime a question pops up. I like that. So I know people are interacting and things like that.
You got it. So if you you can close out your Canva and you should be able to see the chat because since we're presenting off my screen. So
okay.
Close that out and then maybe that'll help too.
So I can stop sharing?
Yeah, because we're doing this off of me. So yep.
Okay, cool. So I still don't see it. Or the exit full screen. There. Yeah. Okay, cool. Okay.
Right, we good?
Got it. Yeah, we got it. Okay. Now I need reading glasses, so it did go small for me, but I actually know what we're doing. So we're talking about here. So offer time. It's more than just a numbers game. Okay. So once you found a property that checks all your boxes, whether that, you know, when you're looking, you're gonna compromise, but there's gonna be things that you just won't compromise with. Like if you need 3 bedrooms, you're not gonna get a 2-bedroom house. You know, if you want a spacious kitchen, that's what you're gonna get. Whatever it is, right? But when we see that house, we don't just look at what the seller says that they want. We actually do a strategy. We do a strategy. Yeah, could we zoom it in? It's probably better for me. So I could, because I start rambling and then we'll be here. Oh, here, right here. Okay. There we go. Okay. So once we can go up to. Once we go up, we're going to go do something. It's called a comparative market analysis. Let me see. Beautiful. All right. So like I said, what I'm looking at when we looking at houses, the first thing I'm really looking at is days on market. How many days has this house been on the market? Okay. Every neighborhood, every county, every pocket has an average days on market. I believe, let's see, Solano County is about right now. We're coming out of the winter, so it's still averaging about 32. I believe it's going to shorten up. The market is heating up. So let's say you walk and you see a home that you really like, and it's been on the market for 45 days. That makes us think, okay, what's going on with this house? Is something wrong with this house? Are these people are being reasonable? Is it priced wrong? What's going on? Something else to think about right now in the market we are in today. This might not be the market next year or whenever you guys are ready, but the market we're in right now, I know you might see on the news, mortgage rates are high. They're not historically high. We just had historically low mortgage rates a few years ago. So what happened with that is that we have a lack of supply. Let me make sure the time, okay. A lack of supply. And the reason being is homeowners, I don't know if anybody is a homeowner in here, but if you are, I guarantee you that you are sitting on a beautiful mortgage rate that you just don't want to get out of no matter what. And so why would a person sell right now if they're in a mortgage rate of, let's say, 3%? Why would they sell this house and buy another one for 6.5? Or I've been seeing people get into it in the fives right now. Why? Because it was a need. What I've been seeing is a marriage, a new baby, a new job, a death, unfortunately, major life-changing events, or flippers. Those are the only houses on the market right now. I have a house coming on the market on the 17th. He went through a divorce. He's selling it and he's going to rebuy. He has to split the money with the ex-wife. So that is the norm. Or flippers is people out here that's buying homes and flipping them. And all those are good for you as a buyer right now because they all want to negotiate because it's all a need. It's all a need. So we're getting seller credits. We're getting them to pay for closing costs possibly because they're getting out of there. Like I said, a death, a marriage, a new baby's coming. They want to get in their new house and they got to sell this house to get in a new house so they can start getting that nursery ready. So those are advantages for a buyer. Okay. We could go up a little bit or down. So when you do put the offer in, that's perfect right there. When you do put the offer in, it's three things that can happen. Now, remember, when we put the offer in, we're looking at what the houses that are comparable in this market. I try to do a mile range, and I never cross over freeways or railroad tracks. And I look in that area and I see what the houses are selling for. And that can give you basically, it's going to give you a proper assessment of how much this house is really worth. No matter how much you think it's not worth, or if your dad or your grandfather thinks that, the houses are way too high than they were in 1982. My grandfather always says that. It doesn't matter. The market dictates the price. And that's just what it is. So when we put in an offer, we're going by the market and we want to make something that you can win, that you can get. So you can look. When I'm looking, I'm like, okay, look, the house right up the street, it sold for $445,000. It had 12 offers. So that means there's 11 other buyers just out there that are looking in this neighborhood that want to buy. So when you're going into your offer, you want to keep that in mind. Like, okay, it's going to be competitive. Is this the house that you want to lowball on? Maybe the house with the more days on market, things like that. So 3 things can happen. They either accept it. We always love those. Reject it is part of it. When you're out home shopping, you can get your first home accepted, or it could take you 2 or 3 times. Personally, if you're making a proper offer, you pretty much will get it accepted unless someone just blows you out the water with terms. We'll talk about terms and things like that too. It's not always about the most money, or which is fine with me too, is counter. That means they're considering it, but they say, hey, we want $5,000 more. Or we might ask for complete closing costs. And they're like, well, no, we're not going to pay all the closing costs, but we will give you 1% toward closing costs. If you guys can do that, then we have a deal. Or now, we'll talk about that a little later. Now, as of August 17th last year, buyers are technically responsible to pay their agent compensation for the services that they provided. We historically have always had the sellers pay for it. And still, since that law's changed, every deal that I've been in, and even from the buyers or the sellers, I have prepped my sellers to be prepared to pay the buyer's commission. The buyer agent is the one that's driving around, bringing the buyer with the money, and they have to get compensated some type of way. And usually it's the seller. So we might ask for 3%. That's what I asked the seller, and they might more than likely counter and say 2.5 or 2. Now you're my client. I'm as a negotiator, I'm trying to get the max, but I'm not gonna, and no real realtor will turn down any commission that they get because they should all any realtor you work with should be really caring about you. You know, you guys, I would say have some type of connection. You know, it doesn't have to be your best friend or anything, but I would say some type of connection because this person is navigating maybe one of the biggest purchases of your life, you know, or maybe not. This might be the first house of many, but yeah, it's a big deal. So you want to be able to trust the person. You want to be able to have a good vibe with the person, and me as well. Like as a realtor, I don't want every client. I just don't. I want somebody that, you know, we communicate and connect. So that's just how it is. Now the EMD. This is something that I talked about earlier. The EMD.
Before you jump in, so Fatima had a question of, does your credit get hit again if your offer gets rejected by having to place a new offer elsewhere?
No. So when your offer gets rejected, you aren't doing anything with your credit at all. Nothing at all. This is just between you and the seller. So we're not running credit. The credit's already ran, and it'll get underwritten, like I had brought up, once you do get in contract. Now, some lenders, and it doesn't work for every client, but some lenders can underwrite you and have you fully underwritten. And that's an awesome offer to have because you put that pre-approved, fully underwritten, and we can close in 7 days, 10 days. They love that. And that's one of the things I was talking about was terms. You know, it's not always about how much money. It's, oh, you guys can close in 10 days instead of 30. That's appealing to a seller who may have just had a death in the family and is just ready to get out the house and move on with their life, or divorce. They want this thing to be over with. So 10 days, 7 days, 14 days, 30 days. That's typically what you'll say is 30, but I love lenders that can get me 14 days, you know. And it also kind of goes with the client, you know, how well the client's portfolio looks and their thing look. Okay. So EMD is short for earnest money deposit. On here it says that typically 3%. I never put 3%. I always put 1.5 to 2, maybe. And it's just all about you. If you're getting down payment assistance and things like that, you know, maybe we'll just put 1% because the down payment assistance is going to come at the end. But we have to put something. So let's just say your rent was $550. Just say 1% of 550,000. And you will deposit that in the first 3 days. And then, like it says on here, is an act of good faith. It's saying, thank you for accepting this contract. Yes, we are very serious about this, and we are moving forward with this purchase. That's what it displays. That's what it displays. So you have to do it, and you don't give it to me. You don't give it to the seller. You give it to the escrow company that we talked about. Remember, someone asked me about the escrow, Chicago Title, Placer, Fidelity, all those type companies that you might see. Those are escrow companies, and they're helping people purchase homes. Okay, we can go on down.
And you've got a question from Christina. Is it better to work with your bank or a credit union or what?
Man, so as a realtor, I'm going to give you a realtor answer. And my realtor answer is no, the bank is not better. No, the credit union is not better. You need to get with a mortgage lender. I feel like mortgage, and these are, and I'm going to give you reasons why. I'm not just going to say that. Banks close at 5 o'clock, and they sometimes are open on Saturdays. When are we looking for houses? We're looking at houses for the most part in the evening or on the weekends. Yes, I've shown homes in the middle of the day on a Wednesday, but you want, when you see a house that you want and where we live, we want to be able to call somebody. And I know with these banks, because I've dealt with them and I have closed deals with banks, but it's like you gotta send this message and you got to wait and then this, and this is just not the market for that. I have a Navy Federal friend. She works at Navy Federal. We were all out the other day with the kids, and I was telling him, I said, I never tell people to go to Navy Federal. Now, if you want to go there and help your credit go up and get a nice credit card or even get a good car loan, perfect. But buying a home, I mean, they take so long. Remember, I was just saying how we want to have where we can do short days, short offers, 14 days, 30 days. These banks, 30 days they can do 30 days, but it gets so intense that as a realtor, and I would speak for most realtors, they want to have somebody that they talk to, that they have a relationship with, that they can communicate with well, so that we can be successful. So is it there? Yes. Chase offers great incentives, Bank of America, but this is what they do. They give you pre-qualifications. They give you pre-qualifications. They don't give you pre-approvals. They don't pre-approve you until you're in contract. So personally, if you want to be competitive, and if you're thinking about living in Solano County or anywhere in the Bay Area, Sacramento, maybe not as competitive, but it's still competitive. A lender's going to have you with a way better competitive rate. I mean, a competitive way to get this deal closed. And they'll call, the bankers, they be so involved. It's just like a stack of papers and they're just going through them. There's no personal connection where your mortgage lender pretty much knows who you are. They're going to be on the phone with you. And yeah, so that's my answer. You free to do whatever, but personally, I would like something different. I would like a mortgage lender. And they're going to give you better rates too, okay? Because the bank is the bank. The brokers are going to shop around. They're going to give you the best rate. They're very creative. All right. Contingencies. Buyers, take note. Once you find a property, the contingencies are what protect you from the money. Whatever money you put into this thing, if the deal falls apart, you want your money back. You don't want to just give it away. And I've been in deals that fall apart. It happens. Doesn't mean it's the end of the road. It just means that we couldn't meet terms. All right, let's go straight to this first one. Investigation contingencies. Investigation is a long word for inspection. Inspection is something that as a buyer, you're going to pay for. You're going to spend up to maybe $1,000. I personally have a inspector that'll come in for a pretty good price, $200, and then the pass is about $200 too. Okay, you want both of those. You don't want to buy a house without it. In very competitive markets, you will see people waive this contingency. So they're like, we don't care how the house looks or what the quality of the house is. In the pandemic, when the mortgage rates were so low, we had people waiving all these contingencies. They just wanted the homes that bad. So an inspection, pests, they're going to look for not just bugs and things like that. Everybody always think that, but they're looking for water. They're looking for dry rot. They're looking for water damage because water is a pest when it's not taken care of correctly or the gutters aren't working and things like that. So they're going to see those type of things and they're going to look for termites and they're going to look for like all those type of things. And they're going to call all those things out. So what happens when we get those things, we hit the seller up. Yep. Water, dry rot, pests, etc. Exactly. We give those to the seller. We write it up. Hey, man, this thing has $25,000 worth of repairs. What's going to happen? Are you guys going to give us the credits for it? Or are you guys going to get it fixed? I personally like to get the credits. I think it makes everything smoother. You don't have to have an inspector come back out again to look at it. They can hire their cousin to do it, and say, oh, yeah, it's done. And if you don't have the inspector, if you want to pay the inspector to come out and look at it again, then that's on you. I personally like to get the credits. I think that's just more money in your pocket at the end of closing, because you're paying for things, so it will take money that you will spend and take it. You have it already, so you can pay for it yourself. And I think that's the way to go. Everybody doesn't want to do that. Some people want to get it done. They don't want to deal with anything until it's done. And with the credits, you can hire someone to come in there and fix it professionally while you're in escrow and close, and then do it like that. And some will even accept the payment at close of escrow. Okay, so that's basically inspection. Next is appraisal. Appraisal is what I said earlier is the bank. They're not going to give you a loan and the house doesn't appraise for it. It's pretty simple. If the house, they got some examples down here, but let's say you put $100,000 down on a $600,000 house, it has to appraise for the 500,000. And if it doesn't, they're going to tell the seller, and sellers listen to appraisers. No one argues with an appraiser. Whatever the appraiser says, that's law. Okay, so they'll say, okay, you want 600, but you need to change this, or you need to fix this, or you need to do that. And whatever needs to get done, they're going to do it, or they're going to drop the price of the house. Those are the two things. So I personally like when the house appraises for more than what you're paying for it. So you can walk right into it with equity, and they can't charge you more, just so you know. If the house appraises for $620 and you're paying $6 for it, they can't say, oh no, I want the 20 more thousand. No, you're already in a purchase agreement and it's over. And I've seen that happen. Does it happen a lot? No, but I have seen it. All right. The last question.
Christina was asking, so how are people doing these offers where they're giving whatever over asking price? If the loans, I'm assuming she's talking about that. You hear bidding wars and stuff like that, where people are ratcheting it up, but it sounds like the mortgage lenders are like, no, it's appraised for this. That's all you get. So how is all that happening?
Well, those people have the money in the bank.
Okay.
Pretty much. During the pandemic, the mortgage rates was low, and stock markets, people were getting so much money from the stocks and everything that it was a lot of money on hand, So yes, people were just paying. They were waiving appraisal and they say, hey, if it appraises 50,000 less, that's fine. We'll pay for it. No problem. And it was for that. And I don't like to call anyone average, but for the hardworking person that made a decent income, they were still getting beat up by big money people, It was a pretty, and I am a pandemic realtor. I came right in the smack of it. So I was getting whooped for those first buyers. Oh man, we was in tears because, like I said, somebody's willing to pay $100,000 over what the house is. We're not seeing that right now. A little bit, because this is the Bay Area and it's people with money, tech money and stuff. So you will see that, especially when you get in places like Oakland, like certain neighborhoods like Maxwell Park. Yeah, you'll see all type of stuff there. Oakland Hills, you see all type of things. But we're talking about more affluent type people. And if you're affluent, yeah, you want to put it down, go ahead. That's what's happening. Okay. Next, loan contingency. This is kind of like what I said. Don't go buy the car. Don't go buy the furniture. Don't go do anything like that. That's the only thing that this can mess up. Maybe some job history or something. Just they couldn't figure out. Like your jobs are so all over the place. But even then, they should be able to figure it out. No lender should let me personally. I don't want to work with any lender that lets me get all the way to this point and then they're telling me they can't get the deal done. And I'm not saying that it doesn't happen, but they should be knowing already. Oh, you want some color? My daughter's here. You want to color? Yeah. Sorry. They should know that you're qualified and approved. Yeah. So my daughter distracted me. Sorry, you guys. They should know that you're pre-approved. So if you don't go do anything, like make any crazy purchases or anything that will make them have to question the debt to income ratio, you should be great and you should be able to close. So as we're going through the escrow, we're removing these. So inspection, whatever happened in the inspection, that's fine. Okay, we agreed to the terms. Okay, we get that signed and addendums. Let's remove it. So every time we remove a contingency, that's just one step closer to you getting the keys. After I remove the appraisal contingency, I'm pretty much thinking this deal is finna close. Has it? Not. Yes. I've been in a deal recently that fell apart, and it was no fault of mine. It was really a lender that I don't work with, but the buyer brought this lender. Um, and this is what happened. So this is a learning lesson for me too. Okay, she had a lot of money. She had about $550,000 in the bank that she had got from stocks and things like that over the years. We put that as proof of income, proof of funds when we were saying that we're going to make the deposit. She was coming with the $20,000, 20% deposit. The house was about 625, so she was coming with about 130,000. Okay, so when she showed the money in the bank, after she pulled out enough of the deposit, she put the rest of the money into a different type of stock thing. Now, the lender, and that's why I like to work with lenders that I work with, because we can communicate and we're not, it gets chippy sometimes. He approved her for an FHA loan, and he kept saying, oh, it's an FHA loan. I'm like, okay, what's wrong with the FHA loan? But he wasn't telling me it's an FHA loan, and she's approved on 2 jobs, but one of her jobs she's only been on a year. The FHA loan, you have to have 2 years of income. You can't add. So they couldn't close the deal. Now, she was going to just put 400 something thousand down, and then that way she could get approved. So what happened was I put out an extension, and the seller was like, why? What's going on? And what happened was I'm like, well, the one job didn't get approved. I was being transparent, which you have to be. You have to be honest, right? One of the jobs didn't get approved, but she has the money, so she's going to make a bigger deposit. They're like, okay, cool. Make the deposit. Meanwhile, she had took that money and put it into a different account where she couldn't move it, or it was going to be penalized like 20% or something. So she didn't want to do it. So the seller got like, look, y'all showed me proof of funds already. Why are you saying you don't have it? So all I'm saying is when you show proof of funds, you're legally, whatever you show, you have to submit that, or they can pull out. And they eventually did pull out, and it was the lender's fault and the buyer. And I learned a lot from it myself personally. Like, I was a little skeptical of working with this person. That's what I'll say. She's a lovely person. I didn't like the lender, and it was just a lot. But what I'm saying is, whatever you show in a contract, you have to perform. And when they didn't perform, they were in breach of contract, and they was just pressing us, and she was trying to get the money from this other way because she did it, but it didn't work out. So to avoid all that, don't move your money. Just don't do it. If you show proof of funds, do not move it. Question?
Yes. Oh, wrong this one. So Vivian, she asked, what is FHA?
Good question. FHA is a first-time homeowner loan. They have different loans. FHA is one that where you only have to put 3.5% down. So I know a lot of people think you need to put 20% down. It's just not true. You can even put 3% down on the conventional loan, but you have a FHA, which 3.5% down. Now, what they do is for that 3.5%, they give you a personal mortgage insurance until you pay off or you get to the 20% over time. Or here's a catch no one talks about. If your home, which happens a lot in California, I don't know if there's any homeowners on here, but your home does grow in value. So once your home grows in value 20%, you can take off the PMI. So FHA is great for down payment, but it does give you a personal mortgage insurance, which adds on top of your monthly mortgage. So you always have to put that in there. So they have FHA, conventional, and VA. VA is for veterans. That's a veteran loan, and it's a really it's a great loan. They don't have to spend any money. So if anyone's a veteran, it's always good to get a good lender that can help you navigate the VA loan. And if you are, thanks for your service. But those are the 3 major mainstream loans that you'll hear: conventional, VA for military, and FHA. Yep. Any other questions? I thought I saw more.
Nope, you've got them at the moment. You're good.
Okay, so loan contingency, if you show proof of funds, don't move that money because they can demand it. That's something I learned. And by the time we get that, once we remove that, that means this deal is done. You're about to get keys. So let's go down. Where are we at? 650. Okay, cool. All right. Taxes and fees. Solano County, the seller count covers all transfer fees and things like that. Sewer lateral. If you are thinking about buying in the East Bay, any seller has to make sure that sewer lateral is inspected. Solano County, they don't have that law, but the sewer lateral is a pipe that goes from your home to the main sewer pipe. So it's the one that transfer all your waste. In the East Bay, they want homeowners to not have to worry about a cracked sanitary sewer pipe when they buy their home. I think it's a great idea, but Solano County doesn't do it, and it is an extra cost. So in East Bay, you might find sellers that say we need half on this or whatever to pay for it. Some sellers just don't have the money to get it done. We can go up. Like I said, transfer taxes, that's usually the seller. Closing costs. This is something that no one talks about, but it can be 1 to 3% of the loan. So I know everyone talks about down payment, but not only do you need down payment, but you need closing costs. And it varies from home to home and taxes and county and street and all these different things because different things get taxed different ways. But while you're in escrow, you will have an idea of what the closing costs will be from the beginning when you get your pre-approval. So whatever price that you're comfortable with, you'll know what your closing costs will be ballpark. It can change a little bit once we find the exact address, and things like that. But it is a cost. I'm trying to negotiate buyers to get the sellers to pay for it. I've done really good. Last year, I got a few people to get all their closing costs covered. So it's a thing. As this market heats up, mortgage rates look like they're dropping. I don't know how long that's going to happen. So you have to remember, not only do you have to cap, if you're going FHA, 3.5%, you probably will have to have about 2.5% at the end. So just keep that in mind. I don't know if I touched this, but you can technically buy a house with a 580 credit score, just so you know. Does it make it a little difficult? Yeah. Once you get to 620, 640, you start being able to get a conventional loan, which can possibly, well, it's not possibly, it's going to take off the PMI if you get a conventional loan. So credit has to be up there. And yes, you could buy a house. That's awesome. You definitely can. You got to know that the rates will be a little high and things like that, but it is possible. Okay. Next, going down. All right. So we've talked about this, but we're going to just kind of go through it briefly. And the biggest thing is this thing right here. For years, as I was a realtor, I never made buyers do this. But as of August 17th, this is law. Okay. I cannot show you a home without you signing a buyer representation agreement. And in that agreement, what are the things that we're going to cover is that, yes, me or anybody, right? Anybody who you choose to be your realtor, you're going to discuss the terms. In California, the terms aren't too long. You can only be into this agreement for no more than 90 days. And after 90 days, you will have to redo it. Other states, it's not the same, but California has their own set of laws. I don't know if you're familiar with OSHA, and they have Cal OSHA. But here, you have to sign a buyer representation agreement. I personally don't really make you sign it until we're actually at the point of starting the home search, because a home search is going to take about 90 days, maybe less, maybe more. Pre-approval, you're looking for homes. It might take you 30 days to find a home you not like. It might take you 1 day. It might take you 35 days. Then you average about 30 days to be in contract. Even though I said, hey, with the right client, 7 days, 14 days, 21 days, 30 days. So you figure that's around 60 to 90 days. So I like to do it right when you're pre-approved and we're scheduling the first schedule of homes. I'll send up the contract. One thing we're going to talk about in there is compensation. Yes, realtors get paid for what they do. I know before, I don't know if you ever bought a house before, but it's been buyers that wondered how does this person get paid because they didn't pay them. And that's why they have this now, because it was so much confusion and sellers felt like they were obligated to, and they're not, but it's been the quiet rule, right? Because the buyer is bringing the money and the agent's been out showing homes and educating and doing all this negotiation. It's a thing. So I put, and a lot of agents put 3%. It's no real number. So remember that when you're talking to a realtor, it's no fixed number. That was one of the things why this came about, because it was a lawsuit and people were saying, well, this is what we do. And traditionally, you would see agents charge sellers 6%. They were taking 3.5%, and they were giving the buyer agent 2.5%. That's what we would typically see, but there was never a rule. The commissions are always negotiable. So now that they have this new agreement, it's in there. It's in there so much that no one's going to be confused. I asked for 3%, and I'm with the thought that we're going to get it from the seller. And if the seller comes back with 2.5 or 2%, I'm pretty much happy with that. If you're going to get the home that fits your needs and serves your needs, it's not a big deal. That's just me. Everybody's different. But we'll go down a little bit. Okay. So you sign the buyer representation, boom, accepted sales contract. We talked about that. So what's that mean? We're in escrow. Now, I really like these boxes because it's showing you how fast this train is moving. Okay. Now, as soon as we're accepting a sales contract, I'm calling my inspector for you. His name's Bill. He's a great guy. You got to get on the phone and get off, because he will start talking about everything, right? But he'll be there and he's supportive. So I'm going to be doing that, and I'm going to be receiving the disclosures. A lot of times disclosures are already disclosed in the Bay Area, but technically when you're in contract, they don't have to disclose things for 3 days. And those disclosures are things like their personal pest report, their home inspection, whatever happened in the home, like if someone died in it, if someone was murdered in it, if it was a drug home before, whatever things that need to be legally disclosed, we'll receive them in 3 days. Bay Area, sometimes when we're looking at the house, the disclosures are already there. All right. At the same time, the escrow company is opening escrow, and they're going to be sending you an email. So you're going to be getting all these emails from people that you've never heard of before. But if you had a good realtor, you will be expecting it. So they're going to say, hey, here's this. You can come in and send us a cashier's check, or you can send us, you can wire it to us. And here's the instructions to wire. At the same time, your lender is working and he's starting the loan program. Everything that he pre-approved you for, he's activating it now. And he's getting those underwriters that I talked about. They're starting to do their thing. Now, me and you, right after that, the next level, we're looking through the disclosures. We might hop on a meeting just like this, a Zoom meeting or something like that, where I can pull up the disclosures and we're looking through it so we could be knowledgeable of what's going on. Also, we had inspections, so we're going through the inspections. We're saying, hey, is this something that you care about? Some things I'm going to say, hey, I wouldn't worry about the shower head being messed up. I mean, you can go buy your own shower head from Walmart or Target or wherever you shop at, right? You don't want to debate about small, frivolous things. You really looking at the house to see if there's no termites, there's no mold, and the bones are good. Roof, foundation, those are things that's important. Cosmetic stuff, yeah, check that out, and you will make the price before that because of those. So at the same time, the title company, they're going through the home and they're making sure that everyone that said they owned it, because it'd be all type of stuff. A husband selling the house without telling the wife he's planning a divorce, or vice versa, or family members, a death in the family, and now one of the sons is trying to sell the house without the siblings. Things like that happen. So they're making sure that everything is on the up and up. And if something pops up, then it will be dealt with or seen if it get dealt with. At the same time, the lender, you're not doing this, the lender's doing this. They're calling for the appraisal. That's their people. They're calling for them. They're working for them. The inspectors are working for you. The appraisals working for the bank. The inspectors are going to be they're going to pick up everything. And that's great because they're your inspector. So they're not going to leave anything unturned. They don't want to get sued. They don't want to be held liable and say they didn't show something. So they're going to be so nitpicky. I mean, a chip in the counter, they were going to call it. Bleach stain in the carpet, they're going to call it. They're going to call everything. And that's what you want because you need that to negotiate for any repairs. And at the same time, around this time, you will be getting home insurance. You will not close the deal. You will not close the deal if you don't have home insurance. The lender will not give you the money. Just like a car. When you buy a car, you cannot drive off the lot without the insurance. At least you can show them your old insurance and say, hey, I get it. They're like, okay, fine. At the same time, over here, we're receiving the loan commitment and they're removing all the financial contingencies. Okay, can we go up? And at the same time, on this side, we're right there. Perfect. We're releasing the inspection because we came to the agreement with that, and they're releasing the appraisal. So I personally like to leave the loan one there unless they just hound me for it. Hey, why we didn't let the loan one go? I usually just say nothing about it because I just want to keep my clients protected as long as possible. So I usually don't never lift off the loan contingency until you are putting the deposit balance or down payment to escrow and you're signing your closing and your loan documents. And then we're there. So you sign those documents at the title company, or they can have a mobile notary come to you. If the mobile notary comes to you, they're going to charge you about $200, just so you know, and it is to you. Just inspection is for you as well, and appraisal. Those are all your costs, and home insurance. Those are all things that you will be paying for on top of down payment and closing. So deposit balance of the down payment to escrow. You're going to sign your closing papers. They're going to send it to the lender. The lender is going to look through it. Maybe an hour or two. It just matters what time of the day. If we do it early, you're getting your keys that day. They're going to loan the fund. They're going to fund the loan, whatever. And then the title is going to transfer the title. And they're going to send me an email. They're going to send you all the emails. Going to say, congratulations, you are now a homeowner of whatever address it is that you want. And the keys are already going to be at the house, and I'll be setting it up, or whatever realtor that you use. They'll be setting it up and having it ready, and that's it. And you take the picture with the key or with the sign in the front, and you're a homeowner. That's pretty much the steps,
That's awesome. Back when you had mentioned about insurance, Christina asked, what about all the insurance companies leaving California?
Yeah, so the news is saying that they are, and it is changed, but they're not going to not insure. They have to insure homes. You know what? That's one of those things right now that I'm going through that, just like you guys. Like, I'm being educated on these things on the fly. I mean, rates have gone up. I'm sure we all felt it with cars, homes, things like that. So we're still hearing prices, but I'm still getting people insured. We're still in contract. I'm in contract right now. She bought her home owner's insurance. It was there. It was available. So just remember this. The news, they're great, but they love to, I don't know why, but they love to kind of induce a little fear. So yes, insurance companies are leaving, premiums are up, but it's still something that's happening. You have to have insurance to buy a home. So just keep that in mind, that's a cost that you will have to pay, and it might be a little higher. And it's one of those things that you just don't know what it's going to be until you find the exact address and you're in contract. So you can always have a ballpark, So that's one of those things. What is a buyer representation agreement? I actually went through this already. Does everybody not know what that is? Because I went through it earlier. If so, let me know. But it's just, again, it's just to make sure that no one is confused, that our verbiage is very transparent, that commissions are negotiable. And if you want to pay, you can. If you want to pay your agent, you can. As an agent, me personally, I really would love if the sellers would pay. And so far, that's all I've seen. I've seen that. And but in other regions, I hear of buyers paying their agent all the time. Yep. So it's a new thing. California was always kind of laid back with that, but it is law now. So just know, if you want to go look at some houses, you are going to have to sign one of those, because no realtor is going to want to lose their license over it. Now, if it's an initial consultation or something, and we just meet at a house, that's a little different. I'm not going to make anyone sign for that. But yeah, this is kind of what I talked about earlier, but it's just about the compensation. So, any more questions? Come on.
There's nothing in the chat right now.
Okay.
But that was absolutely fabulous. Thank you. So informative. So we've got a few more minutes, so we'll leave the chat open for folks who might have questions. I'm going to take a second here and also let people know that if you do have questions or you want help about your specific situation, that you can go to solanohomeassist.com. And on there, you can access all of our services. And if you hit that green start button, that's right up here at the top, you fill out a form about what your situation is and what you're dealing with. And this can be about your home purchase. After hearing what Cortez was talking about your credit, if you want to review your credit with somebody and have them walk you through how to get that cleaned up in preparation for when you're ready to buy a home. If you're facing a foreclosure or eviction, these are all things that you can talk to somebody about. And once you do, you will have the chance to pick a date and a time that works for you. You look at all of these open dates and times. So if something's going on and you want to talk to somebody tomorrow, there's all kinds of time slots available. So this is all available on our website at solanohomeassist.com. You can also see what other workshops we have coming up. And because you'll be seeing a lot more of Cortez. He'll be doing this presentation again, as well as some other presentations. We've got Corina Cortez. She's doing information about getting ready for tax time. We do credit repair workshops. So keep an eye on our website and take a look at the workshops that are coming up. So
yeah, take advantage.
Yes. So I'm not seeing any more questions in the chat right now. So Cortez, any final thoughts before we sign off?
Yeah, I'll say this and give you something to think about. I had this slide, but I didn't figure out how to pull it up. Home ownership is about. Thank you, Fatima. Home ownership is, it's a bit, you can make money off of it by just owning it, but it's about the freedom, having something that's yours. Something that you can do what you want. When you rent, you can't paint this wall, you can't do this, you can't add your flavor to it. So those are all things that are great benefits that help out with it. So just keep those in mind as well. And I would say it's a lot easier than people think it is. I didn't think I could do it, honestly, until I did it. And so the first step is what you guys did today. So I'm happy that people showed up to get some of the knowledge, and I was happy to be here. So I'm thank you. And Christina's excited. That's what's up. That's good. Congratulations for coming here. When I do these in person, I always tell people, let's do a round of applause, because it's a big step. I didn't think I could do it. My mom was like, "What? You 30 something?" I was like, what? It made me even more mad. Like, okay, no, I'm doing it. This is not the attitude. So you can do it no matter what age you are. And you never get rejected. When you talk to the lender, they're not going to reject you. They're just going to give you a game plan. And follow that game plan. Trust me, and it will work. I'm sure Nisi, she's a homeowner. She knows. They give you that game plan, you do it.
I am not a homeowner. I bought a house a
Oh,
long time ago, and then
okay.
I spent some time incarcerated. So I am in the process of rebuilding my life. So everything that you're going through is what I'm navigating right now, because my understanding is, even though I bought a house a long time ago, I am once again a first time home buyer because it's been
Yeah.
so many years. So I'm looking forward to taking advantage of the FHA that you talked about, and stuff like that. So all of this is applying to me right now as
So
well.
here's another point. So you can always use that FHA. Even if you own a home, you can use that FHA loan again as long as you're out of the personal mortgage insurance. So once you get out of paying the house grows in 20%, or you just pay the mortgage insurance off, then you can use the FHA again. So there's no time limit. It's just personal mortgage insurance being paid off, or 20% in equity, which is
And
the
it
same
has,
thing.
but the it's for a house that I'm going to live in, right? I can't use it for like investment property, or doing something crazy like that, right?
No, you
Oh,
can't.
oh,
I mean, I'm just gonna say this. There's no FHA police, okay? That makes
okay.
sense.
That makes
Like,
that.
okay, now don't
I'm
be talking to the lender, and I know I'm being recorded. Don't be on the lender saying, "Yeah, I'm buying this because I'm gonna rent this house." Don't say that. Just say what you say and get the keys. Once you get the keys, no one is pulling up and saying, "Who lives here?" It's not Section 8.
Yeah.
Just keep the verbiage. You don't have to disclose everything.
So,
So,
that's a really good question. So Solano County recently is now doing the whole home purchase with Section 8 vouchers now. Is that anything you've got experience in or can touch on? Because a lot of people who are Section 8 or in affordable housing think they can never buy a house. And now there's these programs where, guess what? Yes, you can.
I literally just made a post maybe about a week or two ago where I talked about it momentarily, but it's a program called NACA. So you can connect NACA and Section 8 together, where Section 8 will help you pay your mortgage, and NACA is no down payment, no closing costs, and they pay all the fees and stuff. So it's some steps, but if you take them, you will be a homeowner. The contract that I'm in right now is with the NACA buyer. My kid's mother, she bought her house through NACA. That's NACA right there. Yep. I know how to navigate that. You see right now, 5.625. That's the lowest in the country. So they have the lowest mortgage rate. It is a process. It's not easy, but it doesn't. It's not low income. It's anybody. It's anybody. Now, it's based on income of where you can live. So if you're higher income, they will not give you like the full pass because they're a community development. So they're turning neighborhoods from rentals to homeowners. So if you're a low income or a lower income, whatever the criteria is, you can shop wherever. But if once you hit a certain bracket, they have tracks. They have a map where you can and where you can't shop. So even if you're making $1 million a year, you can still use this program. You just have to buy where it's permitted.
That's amazing.
And
So
sometimes that could be a new home, and you can buy a brand new home, like one of those new homes through NACA. Yep.
So one of the things that we're starting to do too is we're working with Solano Affordable Housing, and we're going to be bringing these workshops on site in some of the communities here in Solano County to address this, because people don't realize that where you are at that moment, that's just a stepping stone, and all of these
Yep.
opportunities are available to you as well. So I'm excited because I feel like that a lot of this is going to apply to me. So I'm really excited about this.
It's over 2,000 programs. That's a lot. It's over 2,000 programs in this country that help with down payment assistance. Now, are they knocking on the door saying, "Yo, hey, here's this program"? No, but
Mm.
Solana Home Assist is here to help. So I'm happy to be part of it and spread the knowledge. And if you guys if you guys want to go to my social, you can look up Cortez Dameron. I'm sure you could find. I drop little nuggets on there, here and there. And I think we're done. Everybody had their questions answered. So
Thank
Yeah.
you. Yep. Looking. Thank you. So Rick, he said really helpful. Thank you.
Thanks, Rick. Appreciate that.
Thank you. So, Cortez, this was absolutely wonderful. This so exceeded my expectations. I thought I was going to be bored, and I'm so glad that I had the opportunity to hang out with you tonight. And thank you so much for giving us your time. We will make this recording available on demand, both on the Solano Homes website. It's also going to be in the Empower Solano Learning Portal. Of course, everything is free. We'll make sure that the links that Cortez shared with us are also available, and the buyer consultation guide that we went through is available for download. You got help. We are here to help you. So thank you so very much. Thank you to Solano County for letting us bring this program out. It's fantastic. And I hope that we get to see all of you at some of our other workshops, talking to our housing specialists, and we're on this journey with you. So thank you so much. And we look forward to seeing you next time.
Yeah. Thank you. You have a good night, everyone. Thanks for coming. Appreciate it.